And if you get the blocking, and they say in football, the blocking, the passing, all the basics down, well, you're going to go out there and perform pretty well. And Sonny, that's really what's going on out there. It's you have to have that reliability that mortgage banker ran the file through, and this file is going to close in 30 days because you're presenting that to the other side, the listing agent side.
Right, exactly. And not only is it important that the mortgage side read through everything and collect everything, it's top of mind for me today is that the client needs to read through everything that they sign. A couple reasons. One is I had no power for 6 days last week, and I realized how much of real estate is technology based now because I had no electricity. And I think sometimes people aren't as thorough as they should be because they're signing things electronically.
I couldn't agree more. I can't tell you how many times I get a purchase agreement and the buyer goes, well, when am I closing? I'm like, it's on your purchase agreement on this date. And they're like, well, I'm on vacation that week. And I'm like, we got a 30-day PA with a 5-day inspection period, and you're going to be gone the last week. I can't get a loan closed in 2 weeks. You know what I mean? So I think it's important that everybody reads through that. And you're right. I think they get excited, they start e-signing, and they don't take the time to actually read what they're signing, which is so important. And I'm sure the same happens to Harvey and you guys all the time.
Yeah, it definitely happens to me. And on the buyer and the seller side, they'll not read what I send as far as the offer is. And I usually try to really break it out, the high points of it. But I'm constantly dealing with, that it's electronic. You guys have been doing this much longer than me. I don't think I could have done it before it was electronic, but that's the, kind of a pitfall is people not reading through.
Right.
Yeah, those DocuSigns really helped out the real estate industry, especially with these competitive bills. But you real estate agents, Sonny, are still writing 30 days on purchase agreements. I've got a jumbo loan, 30-day purchase agreement. And sure enough, like Lisa said, client's got a summer vacation. He's a wealthy doctor. He's got a summer vacation plan. We were able to get him to consent and get the appraisal ordered. And he got his inspection done. He's away on vacation, but we are moving forward. But so often, it's just as simple as they're not really going through and reading all these documents. And it leads me to I hate when I have to bump heads or bring something up to an agent. And I always tell them, as soft as I can be about it is, hey, look, I'm just trying to point something out. So how often? So I have a married couple, Lise, and I got the purchase agreement. Husband's a doctor, wife works, but it's a small part-time job, stay-home mom. Her name's not on the purchase agreement. And I know that 1,000%. That she's on the current home because I do their mortgage, their refinance. She's entitled to the current home. If we just put her name on the purchase agreement and she signs it, and then she goes to closing and signs the few documents because she's not in the mortgage, she's automatically on title.
Right.
I actually just got the agents telling me we don't do it that way. I can't throw the agent under, and I just pray that they're not going to listen to this podcast. 99.9% of the families buying homes in the United States today, I'm going to make this, I don't know, I'm throwing it out there. Usually that doctor wants his wife with 2 kids at home, who's the homemaker, who does his, here she's on title to that house. Absolutely. She would probably be petrified that she isn't.
Yeah, I would be. I would absolutely be. I don't know why people think that it needs to be done afterwards. I mean, they could absolutely be doing it, and they should be doing it time of the purchase agreement. Otherwise, you have to wait for that deed to be recorded, which can take, yes, there's the recording, but not every community uses that. And sometimes they're backed up after COVID. You have to wait for that to be recorded so you can then file a quick claim deed to add her, which, that could be a few weeks. Then why would we, make the extra expense and the extra effort when it could have been done at the same time? So I'm not sure why they wouldn't have added her. I don't know why they don't do it that way, but that they're really doing a disservice to their client.
Right.
Sonny, I'm telling you, yeah, go ahead, Sonny.
No, I was going to say, I don't know. And I get, and I don't know if this is other realtors, but I get requests from the clients to want to do it after. I don't know where that whole thought process comes from, what myth that is related to, but a lot of buyers ask to do that after. I don't know why.
Yeah, a lot of times a husband and a wife, and just in our world, is the wife's, it's their marital assets they're using to purchase house, their name's on the checking account. Of course, they have kids at home. the guy, that's the whole reason the guy's signing. He's buying this house for his family. Of course he wants his wife on title at closing. It's just it's like such a known thing. And sure enough, this morning I got kickback on it saying, we don't do it that way. We don't do it that way. You don't know how to do it the right way. So anyways, we're always learning something new in the mortgage and real estate business. And I'm going to kick that back to you, Lisa. Tell me something new that people should know right now when they're buying a house and getting the mortgage, and then we'll have Sonni comment on it.
Something new that people should know. So, I think there's a misnomer in how things like down payment assistance programs work. And I think one of the biggest things right now is I get a lot of kickback when someone has a FHA approval or, a MSHDA approval. So MSHDA doesn't mean that MSHDA themselves are lending money. It could be an FHA approval. It could be a conventional MSHDA approval. But we're using these approvals right now so people can make appraisal guarantees. It doesn't mean that someone's broke. It doesn't mean that they have no money in the bank. MSHDA allows up for $20,000 worth of assets. So if someone's trying to be in a competitive market and maybe they've saved, a specific amount of money for closing, but they don't have a lot extra for these guarantees, we can utilize these programs. We can get the down payment assistance. They now maybe can make a $5,000 or $10,000 appraisal guarantee that they couldn't make before. So there's a lot of misinformation out there about how those programs work. MSHDA, yes, it's a double underwrite, but they usually take about an extra 3 to 4 days. It's not 3 weeks to go to MSHDA. That's a misnomer, and it's not accurate information. So I think that getting an education about these programs and making sure that agents are doing due diligence. I know Sonni never gives me kickback when I say that they're a Mr. Bauer. She's excited, doesn't matter what type of approval, and we understand that, some approvals are probably obviously cash is king, and conventional approvals are probably the next most favored. But, I really want people to take the time to understand that government programs aren't bad. They're not subpar. Money is money. It doesn't matter, truthfully, what the loan type is, because the person's getting paid in the end. So I think that that's a big important thing that a lot of people don't understand. That would be my big thing. What about you, Sonni?
Yeah, Sonni.
No, as on that note, I agree 100%. I spend a lot of time educating buyers and sellers about, FHA. They could be FHA for a number of reasons. I sold a house, a woman bought a house for $400,000 with FHA. She was able to go beyond the limit because, she had the money to make it up. There was some other incident in her past that meant she had to go FHA. And I always emphasize what you said, Lisa, is you get the same check in the end. As long as what you should be concerned about is not the type of loan, not what the bank is, but is this person able to close? So look for the signs that they're able to close as opposed to some of the other things that people are looking for.
Yeah, a little reminder out there too is that we always like to touch on some real estate topics that are a little more current, and that's why we always ask the agents, Sonni, if anything happened in the last week or two that you saw or that we had a kickback. I had this quick claim deed thing after. I'm like, well, why do it that way? It's not really the way you do it, especially when your husband's signing a $1.7 million house. Trust me, we want to make sure that both parties are on there at the closing table. That's the whole joy of it, that the wife's signing also. And she can laugh that she's the owner of that house when she walks away from the closing. But something else that pops up is these addendums. And a lot of the addendums, we as lenders don't want to see. You guys get real wordy on it. And yes, there's sometimes a conversation between the buyers and the sellers that say, hey, you guys put this together. We're going to replace the carpet. We're going to move out of the house. And then we're going to replace the carpet, in that 30 days of occupancy. Sometimes we don't know. We don't need to know about that kind of thing because then there's an escrow holdback and it's an agreement. But there might be an addendum out there that we don't want to know about. And a little heads up there, at least you might have came across this just recently. If they write it as an addendum and we get it, now we've got to get inspections to show that the work's done. We've got to get escrow holdback money, and that's 1.5 times. So sometimes keeping things off the purchase agreement into maybe another transaction. It doesn't have to be part of the real estate transaction to be okay.
Yeah, we obviously, the whole goal here is to get something closed. And if it's something minor and everyone's getting along, I don't think that that's an issue. Now, sometimes we do need escrow holdbacks. If there's a, I'm going to say cantankerous transaction going on and everybody isn't quite getting along, sometimes buyers and sellers, something happens, they're not all harmonious. We want to make sure that we're protecting everybody's interest, and so sometimes there's escrow holdbacks because we'll make sure there's no damage after occupancy. there's all this free occupancy going on, and 30 days free, next 30 days paid, sometimes 60 days free. But when you've got people moving out of a house that the new people own, that the new owners own, if they do damage when they're moving furniture, if they break something, and we don't have any holdback or any recourse, buyers beware. So we always want to protect the interest of everybody in the transaction, especially obviously our buyers. But in this market, being competitive sometimes is taking away some of those protections.
Sonni, let me throw that at you. I mean, the family stays there for 45 days. I'm buying this house, and I've got 2 kids, and the other family's got 4 kids. That's why they need to upgrade, and they're in there for another 2 months. Boy, a lot of damage can be done in an hour with children, right? You babysit your nephews and nieces, you come home and the house is gone. What happens after 45 or 60 days? And should families be protecting themselves a little bit more on that end of it?
Yeah, I absolutely try to still do an escrow holdback, a damage deposit, even if they're getting free occupancy. Like, it's kind of routine if they're paying for occupancy to hold something back. But if the people are staying there, I still, I still ask for that escrow holdback because of that reason, that people have their cousins moving them and they're nicking a wall or knocking something off. And we just need to have that holdback if for no other reason that they have a vested interest in fixing it or being careful, or, you know what I mean? Like, if you don't have anything, then what do they care? They've already got their money.
Yeah. I like this conversation because, after 30 years, I can recall all these times, multiple times, when a family will say, Harvey, we finally moved in, and, they nicked up the walls pretty good when they moved out, but they left all their furniture in the basement. So they had a nice, the old fashioned nice closings where they're still sort of in contact because of this overlay where they might've closed and they have to share some mail. And if any mail comes to the house, and it's nice when a closing happens like that. And I'll make this my last words and we'll go to you guys. I love the old-fashioned closing. I love any closing, but an old-fashioned one where the buyers and sellers are talking about what goes on in the neighborhood, things to sort of pass the torch and say, this was my house that we enjoyed all these years. I'm selling you something with a peace of mind. It's a great, solid house. It's not going to be a money pit. We wish you the best of luck. That's are my thoughts, and that's what I like still about what we do for a living. You guys.
I was going to say on that note, I was thinking of this before you said that, is because of the occupancy thing, people aren't, getting their house until they're not getting their keys at the table. And it's kind of anticlimactic, right? Like, you close and you're happy, and then you have to wait 30 to 40 days. And it's almost routine now. Like, almost everybody has 30 days free occupancy. And it kind of takes away from the fun excitement of the closing. And you end up doing it at the walkthrough, and it's just different.
Yes,
Lisa.
It's funny you say that, because I had a first-time home buyer and I was like, are you kind of excited? She goes, well, I'm excited all that's behind me. But she had a 60-day, I think it was a 60-day occupancy. And she's like, you go back to your own house, do your own thing for another 2 months. You know what I mean? She's like, so you're right. It's very anticlimactic for them. It's kind of a bummer. But, when that day comes and you get keys and you get to move in, it's got to be super exciting, even though you maybe had to wait a little bit longer than, back in the day. I mean, I agree with Harvey. Nothing beats sitting at a closing where everybody's getting along. They're getting keys that day because they're moving that weekend, and remind them to tell, hey, when does mail come, or when's your garbage pickup, because they don't know, and everyone's laughing, and hopefully we get back to that and the market starts stabilizing and we're not so seller's market where we're more equal, and we'll be able to do those again. But in the interim, we're going to just keep plugging and chugging and getting everybody closed and getting to homes.
Hey, great stuff, you guys, as always. And we're going to see you, Sonni, on the Hardcore Mortgage Show this Saturday on 97.1 The Ticket, and we'll look forward to that conversation also. Again, this has been the Hardcore Mortgage Show for Capital Mortgage Funding. We're part of Fairway Independent Mortgage Corporation, NMLS 2289 Equal Housing Lender, and we will see you next Wednesday on the next podcast. Thank you.